Hi everyone, my name is Priscilla and today I'll be talking about the case of Federal Commissioner of Taxation and how I feel. I just would like to mention briefly what happened in the case before I actually go through the relevant facts. The issue was if the self-education expenses that the taxpayer had incurred were deductible or not, according to his profession. So I will start with the facts. So in 1965, Dr. Highfield completed his bachelor degree of dental surgery from the University of Sydney. After a year working as a demonstrator in the Department of Operative Dentistry, he left to the United Kingdom, where he worked as a dentist, which also included the practice of periodontics. After that, he went to Canada, where he secured a degree of Doctor of Dental Surgery that also required an examination in clinical periodontics. He then worked on his private practice as a general dentist in Canada as well, from June 1969 to 1971, where he also did the practice of periodontics. After that, in January 71, he returned to Sydney, acquired a dental practice in Sydney, where he also signed a 3-year lease with the option to renew for a further 3 years, which then he exercised in 1974. So here in Sydney, he was working as a general dentist as well as practicing periodontics, although he didn't have his specialization yet. So in 1975, he tried to apply for a specialization in periodontics in Sydney, but he was advised that the University of Sydney and any other place in Australia didn't offer this master in periodontics. So he then decided to go to England to obtain his Master of Science in Periodontics. So when he was leaving to the UK, he leased his clinic to Mr. Palmer, who was also a general dentist. And then Mr. Palmer could keep all the gains from his work. The only thing that he was paying to Dr. Highfield was the lease. So then in 1976, after a year leaving the UK, he returned to Sydney, sold his clinic to Mr. Palmer, and actually started a full-time position at the University of Sydney and a part-time working as a specialist in periodontics. At the same time, in September 1976, he lodged his tax return, and on the grounds of Section 51(1) of the Income Tax Act 1936, he claimed a deduction for all the expenses that he incurred in London, and those were airfare to the UK and return, meals, examination fees, living away from home expenses, and United Kingdom study costs. The Commissioner, on the other hand, disallowed all his deductions that were related to his studies, as he said that the taxpayer did not have an intention to return to his general practice once he had completed his degree. Alternatively, the intention of carrying on his general practice was given up when he went to London and commencing a degree that enabled him to specialize in periodontics. Consequently, his expenses were incurred too soon to be considered in gaining his assessable income. The Commissioner also argued that the expenditure was an ongoing of capital, private or domestic nature. The taxpayer was dissatisfied with the Commissioner position and appealed to the board. The board, on the opposite to the Commissioner, agreed that his self-education expenses should be allowed as a deduction. After that, the Commissioner, dissatisfied with this decision, appealed to the court against the board's decision. So then the case went to the Supreme Court of New South Wales, where they have to decide if the taxpayer could claim these deductions or not. The Supreme Court of New South Wales held that the taxpayer's self-education expenses were deductible on the grounds of the second link of Section 51(1) Income Tax Act 1936, as they were incurred in carrying on business for the purpose of gaining or producing his assessable income. It's also worth noting that for an individual to be carrying a business is not necessary for that individual to be in the country. For instance, when Mr. Highfield left to England, it doesn't mean that he stopped his business. So he could still be carrying on a business, although he was in England and not in Australia in this year. It is also the main reason for the deduction to be allowed was that the Master of Science in Periodontics was related to his general practice before leaving to London, and he was already performing significant periodontics work. As the taxpayer said, at least 20% of his work was in the periodontic area. Therefore, the expenses were incurred in gaining his assessable income. Because if you look here, since actually 1966, he was already performing some periodontics work. So when he went to obtain his master's, he was already nearly 10 years working in the area of periodontics. The specialization was a special interest and desire to attract more complicated work to it. Therefore, that would enable him to charge higher fees to his clients. The outgoings were neither of a capital nature nor private or domestic nature. The further knowledge that he acquired cannot be regarded as a capital in nature, as it has no reference to the man's body, mind or capacity. Additionally, private or domestic outgoing are usually exclusive. Rarely a private or domestic outgoing will also be considered an outgoing incurred in gaining accessible or producing accessible income. So basically, the court held that he could claim a deduction because he was already performing this type of work before actually obtaining the Master of Science in Periodontics. As I mentioned before, in this case, the deduction was allowed on the grounds that he had not given up his profession as a general dentist. Although he was specializing in periodontics, there is an advancement of his general dentist work, combined with the intention or aspiration that he would be able to become a specialist, therefore making possible to charge higher fees to his client. The Highfield case has been referred in other cases, such as Reece Sanchez and Federal Commission of Taxation and Commissioner of Taxation and Roberts, as well as citation in different rulings. including the last version of the income tax deductibility of self-education expenses, taxation ruling 98/9. The implications of this case for tax professionals are that although the case was in 1976, it's still relevant and applicable to taxpayers in similar situations. However, an important point to note is that when a taxpayer is seeking to change the current employment or business, the deduction for self-education is disallowed. For instance, a general medical practitioner undertaking further studies to become a specialist in dermatology would have their self-education expenses not considered as a deduction from his or her assessable income. When tax professionals are assisting taxpayers managing the tax affairs and the self-education expenses, they must ensure that the self-education expenses are related to the taxpayer's current employment or business in order for the expenses to be deductible from their assessable income. It is also important to mention that in 1976, we just had the Income Tax Act 1936, whereas nowadays we have the Income Tax Act 1997, and the general provisions for deductibility have been replaced by the Section 8(1). So when tax professionals are advising the clients, they have to go and have a look at the Section 8(1). And that's it. Thank you.